back.
And that means we are here. We are live on YouTube, Tackle Trading's halftime report. We've got Coach Tim, we've got Coach Mark, we've got Coach Cody, and we've got Coach Matt as well. First off, Mark, how are you doing today? Pleasantries always to begin.
Oh my gosh, just eat a big, gigantic turd sandwich to start your week. How about that, Tim?
Oh, I'm doing fine, Mark. Thanks for asking. Matt, let's rock and roll here. I'm going to have you drive the screen if you could. Bring your charts up, and let's do this when you're ready. Cody, how you doing, bud?
I'm doing fantastic. Apparently not as well as Mark over there, but
Cody lives in Hawaii. Every day is fantastic.
Yeah, he was talking about golf this morning. He lives in Hawaii. Your trading day is probably very unique because it's early there, obviously. What time in the morning do you get up to trade?
So I'm usually up by about 3 a.m. Market opens at 3:30 my time. So I'll typically start checking my account about 4. I try not to get on right when the market's opening unless I have alerts or something going off. Yeah, I'm usually trading about 4 a.m.
4 a.m. up and at 'em, getting going.
See, you're married.
10 a.m.
But what would trading look like for a single man that lived in Hawaii? Like, you just wouldn't go to bed. You go to bed at like noon, right? Wake up and then
Probably
start the process all over again.
Cody, you bring your chart up. Let's rock and roll with your side if you can. And let's start with the S&P 500. Markets are a little bit flat here today. There's not a lot going on, but it's an important week for a lot of different reasons. Number one, we're kicking off earnings season at the end of the week. We're going to be talking about that. Market felt this morning like it wanted to start a little bit of a pullback, but it's very, very resilient. Let's start with just basic chart analysis on the S&P 500. And Mark, I'm going to have you do that first. Give me a read on what you're seeing technically. Light range candle, red candle, down a little bit. What's your read?
I mean, whenever you have a big week like you did last week, so you have this week where you just have this really massive week. Now, I use my primary gauges to judge technical analysis are short-term moving averages and horizontal support and resistance.
Mm-hmm.
So whenever you have a big run up, sometimes it takes a little bit for those moving averages to catch up, for a new really clear entry signal to catch up. So just from a technical standpoint, whenever you have that big run, sometimes it just softens up a little bit before the next run. I mean, that's very, very, very common in charts.
We're obviously, and I'm looking at the pay range analysis, and Cody, back in early March when we started to run from pivot to pivot, we had about 8 days going up, I would say. And I don't know what you're clicking on here. That's okay.
I'm trying to zoom back out. Sorry. There we go.
You're doing fine. Early March, when we went pivot to pivot, starting there at the end of that expiration, see your green line on the futures contract expiring? That's almost exactly where the pivot was, okay? And zoom in on that entire uptrend as we've been coming from December all the way over. Start right there. Now move it a candle at a time going up. So from March 11th, we went up 1, 2, 3. Keep going. 4, 5, 6, 7, 8, doji on a red candle, then a pullback started, okay? Then we had another green candle coming in. So you're about 10 days in now. Then the big sell-off came on that one day, started a pullback, and then it just went right back up after that little consolidation period. Does this feel like the top of a pay range, Mark, where it looks like it might slow down and hesitate? Or does the fact that we're above those short-term moving average take precedence over any of that analysis for you?
It takes precedence over any of the pay range. I use pay range extensively on individual targets for companies that I might placing a trade on. So for example, let's say Microsoft, and Microsoft, I analyze and say, hey, this has a pay range, which I think is really, really valuable. If you don't know about pay ranges, come become a pro member of Tackle Trading. We talk about them all the time. Shameless plug. Number one, I got 3 or 4 more coming up this show. At least 3 or 4 more. I'm in a shameless plug mood today. But so like if I'm doing an individual trade on a stock, I'll analyze those pay ranges and then help use those to determine saying, hey, on average, when this has a run up after a signal, it will run $8 or $9. And so I'll use that analysis in my trading extensively. When it comes to market analysis, when it comes to like broad market analysis, I don't usually use them because there's so many other things weighing on it. So many other storylines playing it, so much sentiment at play. But pay ranges are really, really, really powerful in trading. They can help determine those targets, which are so important on where you should look to take some profits.
Yeah, there's no doubt about it.
The tackle trading stock and option reports available to pro members have been doing a great time this year.
Plug number 2.
Shameless plug number 2, because they have. Go look at Home Depot. Go look at the run up at Home Depot. An option candidate from just last week. You think our pro members are making money on that one? The answer would be yes. The answer would be yes, because that thing had a beautiful pattern and took off, broke out of resistance, and is still climbing.
I believe we had Home Depot even on some of the bearish trades, back here. So we've just been making money both ways on Home Depot.
One of my favorite things I've seen in the last couple months in our community was we have a good team member down there in Atlanta named Justin, and Justin put up some of his back-tested data on scouting reports from last quarter and this quarter, and kind of went through every single pick and every report. If you're not a member in our clubhouse, I would go into the clubhouse and find that content because it's incredible. Scouting reports are obviously on a Monday morning. As you do your routine, as you go through your process, you're going to then rely on those reports first thing Monday morning. Now, I come back to them each and every day, Mark. There's no doubt about it, because not everything triggers on a Monday, but there are stocks that are triggering pretty much every day on those reports up and down. That's what we do here at Tackle Trading. We bird dog. And by the way, welcome out everybody, Team Tackle. I love seeing that in the chat as we're getting started here. Off Home Depot, back on the SPY for a minute here, if you would, Cody. And let's talk about some of the biggest winners and losers on the S&P today. The market is down. GE is the top loser in the market. And we had a conversation about this in production prep. First of all, if you're new, you might not know this, but I've got an opinion on General Electric as a company. I've made that opinion very well known for a very long time. GE is the top loser in the market. An analyst at JP Morgan came out and downgraded the company. They're down 8.5% today, Mark. And I loved it. It was a $6 price target before. You were telling me in the show. And he actually downgraded it to where he now has a $5 price target. And I even made a point. I want to make one last point, then I get all of your thoughts on this. This company's been around since 1892. They have a negative PE ratio. It's one thing when Pinterest, who IPOs, has a negative PE ratio. You can debate that at least. Why is it? They're a growth company. They're debt-driven. They're trying to get their models up and running, whatever it might be. But when a company that's been around 120 years plus has a negative PE ratio, something's going wrong with the company, obviously, and everybody else out there is seeing it as well. Mark, when you see a gap on a downgrade on a company that is so focused on, like General Electric, what's your read?
I just love it because, you're at JP Morgan or you're an analyst and you issue a report or you do an analyst change where you want to upgrade or downgrade, whatever it is. They woke up one day last week at JP Morgan and they're like, we have a $6 price target. That's not good enough because this company's so crappy right now. We're going to issue a new downwardly revised target of $5. It wasn't good enough to just let their $6. They felt so strongly at how terrible this company is right now. They're like, $6? No, we're going to go out of our way to let the world know how crappy we think this company is. And we're going to make a $5 price target.
Can you trade any gapping like this? Like full disclosure, I'm short GE.
JP Morgan would say yes. They think it's going to $5.
I mean, you have a gap running into a support point here. I think I saw Matt coming in here. Matt, if your mic's working, great. Come on in here and give us some analysis. If not, that's okay too. But Cody, what about you? When you see a gap, how do you react and how do you handle situations like this?
So this is actually one of those unfortunate moments because this actually gapped past the trigger that we had set on those scouting reports.
Yeah.
So the thought is the two targets we had on it was $9 and $8. So the thought is, are you going to try to get into it for that second price target? For me to really want to get into this, I want to see another triggering movement. And so the next triggering movement I would see would probably be a break and close of 9. So as of right now, unfortunately, I just have to watch this and just feel good for everyone who's making money on the way down.
Yeah. I mean, when you miss your trigger, the very first thing that you have to do as a trader is find a new trigger, you know?
Yep.
And if you use stop limit orders when you're building trades, you create a window and you absolutely can miss on gaps. But there's a reason why you're using that kind of order entry if that's the situation that you're looking at. GE below 9 is a new trigger, Mark. That's a head and shoulders pattern in a long-term downtrend.
Cody, bring up a 15-minute chart. This is some of the, what I'm about to do is some of the analysis that is usually only available for pro members at Tackle Trading. Number 3 for those counting at home is looking for, so let's say we have a gap down situation. All right. We have a gap down situation. It looks like your data is continuous data and not reflected. All right. But what you can do is you see that a little bit earlier in the day, a little short-term support. So go down and you see a little short-term support formed at about 9:25 or so. Whenever you have those intraday breaks, and this is how I play gap situations, both on the up and the downside, is find where intraday support or resistance forms and then play the break of that intraday support or resistance. Because gaps are gaps happen a lot. It becomes really important. In fact, I think on Friday on the halftime show, we talked about gaps quite a bit. I'm playing gaps and having specific gap strategies. But this is one thing you can do in a gapping situation. Certainly paper trade it, develop those skills on it. But finding the intraday signal, if you miss on the gap, if you're feeling unsure of where to get in. Because as exactly what happened with GE, when those intraday support levels break on the gap down, that can be a new secondary trigger signal to get in. And that has played out exactly like that on GE.
Yeah, it's a continuation gap. It's fading into support. You're 15 cents away from 9. There's a lot going on with General Electric. Obviously, it's not the only company in the market today, but still a negative PE ratio and downgrades and downgrades and downgrades into a long-term downtrend. Let's move on to another Dow component and S&P 500 component, which is Boeing. Bring up BA if you would here, and go back to a daily chart just for a minute. Obviously, Boeing is going to be in the news all the time lately after that horrific news and the tragedy that happened the last 6 months with those 2 accidents and the flights crashing. The stock has been all over the place and it's been volatile. Gap down on the news about a month ago. Now we've backfilled. We hit 400. Technical analysis is absolutely pure. And Mark, we talked about this one in depth on the halftime report on Friday. Lesson learned, guys. Do your daily routine every day. There's always things that you can identify. Mark, when you see Boeing gapping into support like this, but also off of that 400, what's your reaction here?
Well, let's revisit our conversation on Friday. So here on the halftime report, hey, it's recorded. You can check it out, what we said. When you are heading into technical resistance areas, this is not a time to add in to a stock ever. I don't care what the circumstances is that when you have this nice rise up like Boeing did, kind of off support, coming into resistance levels, we want to see a break that with confirmation before re-entering. But in addition with Boeing, what we talked about on Friday was out of all of the trade candidates out there, you could go trade Home Depot, you could go trade PayPal, you could go trade all these things. Why would you want to add and do a bullish trade on a stock that has this huge storyline that isn't over yet? We talked about this on Friday, how the storyline's not over. There isn't a finality to this storyline. And so one halftime show later, today, what do we see? We see Boeing coming down, because this storyline wasn't over. There is still negativity out there that can cause a gap situation. It's a little bit of a unique situation with Boeing because you don't have these type of storylines play on for weeks and weeks and weeks. Mm-hmm. But this is the situation you have in Boeing where this type of negative, unexpected news could pop up at any moment, which is what we said on Friday. It just happens that the next trading day is the day that it happened. And I don't. Come to even if you're not a pro member, come to the halftime show, come to the clubhouse. We've been around a long time. The three brothers, Noah, Gino, the other coaches, we've been around the markets a long, long time. We have a few nuggets of wisdom to pass on. So, and we try to do that. We try to give all of ourselves. But in this situation, it's unfortunate for bulls that have played out the very next day. But when you have a storyline that hasn't finalized yet, where there's still the potential of new negative news, why are you taking a risk when there's so many other trading candidates?
Well, and the outcome is not exactly unpredictable. I mean, some of the airlines came out, I think it was American, if I remember right, said, we're not going to fly 737s. It doesn't, I mean, even in the foreseeable future, we're canceling certain number of flights every day. The airlines are down today as well, by the way. And Boeing said, we're going to cut factory production on that 737 MAX. Matt, technical analysis obviously does work. Even take all the news out of it. A chart is a chart is a chart is a chart. It gapped down. It found support. It rallied back into the gap point, hit 400, and then c'est la vie. Here we are on a Monday morning talking about a stock that's down 4%. What's your read on Boeing, Matt?
Very simple. The millennials who were buying Boeing and Robinhood over the last 3 weeks because they don't have education just got a very, very good education on market analysis.
Mm-hmm. Mm-hmm.
It really is simple as that, Tim. There was no trigger here. There was no reason to buy here. There was a massive amount of news. There's a massive amount of uncertainty. We're not out of the woodworks yet with Boeing. And from the very moment that news came out, Tim, I remember you were doing a day trade on Boeing that exact same day where you bought kind of the dip, and we were talking about it. And you said to me, well, what do you think I should do? And I'm like, take your profit. Yeah. There's no way you carry this overnight.
No,
right?
And I didn't.
And that's just how I've approached Boeing over the course of the last 3-4 weeks is you can't touch this stock until you get some type of clarity coming out of that Supermax 8, the MCAS system, and the software, fix that's going to happen. You saw Boeing here today, and you guys probably already talked about this, but they've already decreased factory orders on the Boeing Supermax 8 by 20% from 52 planes per month down to 41 planes per month. That's a big deal. And so you have that downgrade coming into the Supermax 8. That shows you right there that Boeing's not out of the woodworks yet. And so it's going to take a little bit of time here. And when Boeing's tradable again, I'm sure we'll be here on the halftime report to talk about how Boeing's tradable again. And we have this great opportunity in Boeing, but that is not today.
Mm-hmm.
I mean, think about it, that's a 20% production cut. If I eat 20% less food this month, I'm going to lose weight. If you produce 20% less planes, you're going to make less
Great
money.
Analogy right there.
So,
yeah.
20% cuts are big deals.
It's a huge deal. It's a huge deal on their bottom line, their profits. And we still don't know everything that could play out in all of these different storylines. There's no doubt about it. Many other companies in the news on the S&P 500 here today, Mark. Micron was downgraded. I saw Win actually took an upgrade. Symantec was an upgrade as well. Micron is interesting, though, because it's one of our darlings, quite frankly, and it's one of your darlings as well, Mark. You love this company. I don't think I'm talking out of school there. It's a company that you focus on, you talk about, you like the CEO, you like the leadership. But on a downgrade where the stock doesn't do much, that might actually be a good sign, Matt, when it only comes down, but you now have a green candle and it held itself. If this breaks out, that's still a triggerable entry point. Yes, boys, Matt?
Yeah, about 45 for me.
Yeah, Mark?
I'm still, it was downgraded on DRAM analysis. Now, Micron is a company that I know like the back of my hand. I don't know every company this well because guess what? I don't have that many hours in life to do that. But for whatever reason, this is a pet company of mine that I really love. And DRAM is like a commodity, the DRAM memory, and it has its own like market in which it trades in. And so I'm seeing if it's like sometimes you have BS reports that are great buying opportunities, and sometimes it's real. I haven't had a chance to dive into it yet.
Mm-hmm.
DRAM.
That's interesting.
DRAM.
Yeah,
I wanted to know this company. I was like,
just compare the downgrades on Micron versus GE.
Yeah.
I mean,
if you don't know anything,
if you don't know anything, read the price action here, and the market's going to tell you exactly what they thought of the downgrade. GE gets smacked in the face all the way down to $9, a potential shorting opportunity under $9. Micron gets downgraded, and it's just a stone throw from the closing price yesterday. So, I mean, the market did not sell on the downgrade here. They obviously didn't care that much about it.
An area of the market that I'm long-term bullish on is security software and services, anything to do with cybersecurity. SYMC is a company on the S&P that is the number one gainer today, and it's up on an upgrade out of Goldman Sachs. Had strong resistance there. Symantec, probably many of you guys know the brand from just their security software that they have. And obviously, that's a good looking signal right there. I haven't traded this company in a long time. It's going on a watch list for me right there. I like that breakout. Let's start with Matt. Matt, when you see an upgrade breakout like that, candle's not a great candle. This is not confirmation.
Not yet, but it's not a bad candle either. If you'll drop that down into a 30-minute chart here, Cody, you'll kind of see what's happening.
I was going to say the same thing
today. It had really good breakout momentum on the cash open. Obviously, some positive news coming overnight to create a gapping situation, and then from the cash open, Tim, you saw some really good price action coming out of that first hour in the trading day, and now what you're seeing a little bit of a retest at 24 intraday wise. I see that as a buying opportunity from a day trading perspective. If we can retest and confirm at 24. And if you can retest and confirm at 24 from a day trade perspective, and you finish above 24 on the daily candle, you got to call that confirmation.
Mm-hmm. Yeah, it's going on my watch list. I think that that intraday price action is something I'm going to keep an eye on even as we go throughout the day. I like this sector. I like the industry. Obviously, there's a lot going on there. By the way, S&P 500 companies that have earnings this week: JP Morgan, Wells Fargo, Delta Airlines, Fastenal, First Republic Bank, and PNC Financial Services. So we do kick off some earnings season later in the week. I'm sure we'll be talking about that.
And it starts.
It will start.
I don't think it ever ends.
It does not.
I want to get you guys' take on this real quick. There has been word, just loosely, not strong, that there are some people that want to go to two earnings reports every year. Would you guys support that?
Yes. I can't say
I would too.
Enough. Yes.
I would, except for one thing. I think you would have companies do lots of their own updates, like how Apple did.
Yeah.
At the start of the year, where they said, "Hey, warning," and stock went down unexpectedly out of nowhere. I think you would have a lot more of that, and I think that might create havoc on technical patterns. You have a nice little pattern, then out of the blue, at least with earnings, when the news is coming.
Yeah, but even on Apple's downgrade, I mean, think about Apple's downgrade for a second. We're going to reduce our revenue by $9 billion. How's the market respond? 10% down in a day, followed by a 35% increase in price over the next 3 months. And Apple's
I know, but what if you were in a trade based on a signal and you didn't know the news event was coming?
No, I get that, but wouldn't that be few and far between that companies would try to shock the marketplace? I mean, companies don't want to shock the market unless they kind of feel they have to shock the market, like Apple did coming before their earnings release when they said, you know what, we know we're going to miss on earnings, and Apple doesn't historically miss on earnings, so we're going to downgrade it so that we don't miss on earnings.
That Apple president, because just like you said, I mean, say those numbers again, Matt. Down 10% and then up how much?
Down 10% on the downgrade of $9 billion in revenue, followed by a slight beat on their actual downgraded earnings, 35% up since then.
Did they not just create the playbook on how to get away from a bad earnings report?
Apple's created that playbook 10 years ago, though.
So, I mean, that's what. When you have a bad earnings, this is what you do. I worry about that as a trader.
Bring up Apple's chart.
Well, listen, I said this over the weekend, guys, on Boeing. I said Boeing should have came out initially and just owned everything. They should have came out and accepted responsibility. It would have been priced in, and then you could have got back to getting into the fix. Instead, we played 3 weeks of parlor tricks with Boeing and whether or not what Boeing was going to do. Apple comes out and says, we're going to miss. Market response. Apple beats. Market response. I think, let's face it, it's Apple. Apple does everything good.
Well, and here's another thing that they've done good is they've actually made us some money if you played them off the option report 2 weeks ago. We're talking about the analysis.
Which is available to who?
Or today.
That's right. Mark, Pro members. How many plugs is that yet?
Number 4.
4. We're going to set a record here today, Matt. I don't mind it, by the way.
For somebody who has shunned sells his entire life, he's had 4 pitches in about.
Listen, I'm working on very little sleep. And so when I get sleep deprived, it's like the equivalent of being on drugs. You get really giddy and you get really.
All I know is, Mark, you're auditioning for the pitch man of tackle trading. That's all I know.
I'm going to give everybody out there in the tackle trading community, who, if you're a member of us, you already know this, but I'm just going to make this statement. Build something you're proud enough to be able to scream it from the rooftops and never shy away from. Our pro membership is incredible, and anybody who tries it is going to love it. There's no question about it. Apple Computer on that pro member scouting report, Matt, it had 2 targets. We had a trigger, we had an entry, we had a stop, we had 2 targets. First target was 200, second target was 207 off the report 2 weeks ago. We're now at 199.16. Obligatory question, do some teaching right here for a second. What do you do when you reach your first target?
You have to read the candle. You have to read the momentum, and you got to let data do the talking. You got to let the data tell you what you need to do. And right now, you got a market right now that is kind of sluggish to start the day. You got a NASDAQ and S&P hitting into targets. You got slowing momentum, and a lot of that is just simply due to we got a big week coming up at us economically, Tim. I mean, economically, Wednesday, we got the ECB with interest rates, CPI report out of the U.S., Fed minutes on Wednesday. You got OPEC on Thursday, and then you got the PPI report coming out on Thursday, followed by the University of Michigan Consumer Sentiment report on Friday. So starting on Wednesday, you got a fairly big week from an economics perspective, and the market's just kind of slowing down in the face of that. And we saw that, kind of the start of the last 2 weeks as well. But here's Apple in the face of that saying, hold my beer, watch this. Let me go up 1% coming into the target at 200. And obviously it's going to slow down a little bit at 200. But you got a big green candle showing momentum coming into that. You're breaking out of the previous level of resistance that kind of had it right around that 196 level. You got momentum behind it. To me, this is not a time where you're like, let's just lock in profit. I think this is the time you start adjusting the stop loss underneath the low of the day or underneath an intraday support level. And a lot of times what I'm looking at there is if you'll drop this down into a 30-minute chart here, Cody, and I'm really becoming a fan of the 30-minute charts these days. But if I had made that trade from the scouting report from 2 weeks ago and I see an intraday resistance support level at 196, I'm going to say, okay, let me adjust that stop loss under 196. Let me give it a little bit of room to continue to move up into that 200 because, yeah, you might say, I'll just get out right now and I'll catch it above 200, and that's fine. There's nothing wrong with that as well. But you might miss out on that trade. And how many times have we missed out on trades that broke out and ran well above where our triggers were going to be? Because if you can break out at 200, that is a very, very, very significant whole number for Apple. And if you can get back above that 200, 207 should be right there in kind of the headlights. But I'm looking at 210, I'm looking at 220, I'm looking at 230 here on Apple. You got a good trend developing on Apple, you got a good pattern on Apple, and you got good momentum on Apple right now.
You know, there's an old saying that you can't go broke taking a profit. I think that is not from traders, by the way. Most traders know to let your profits run, cut your losses short. The instinct of consumers, Matt, is to hurry and grab every time you ever make a small profit.
Well, that's because the consumers are looking at profit loss.
That's right.
They're making decisions over money. And whenever we make decisions over money, we have a tendency to lock in profit way too soon. And we have a tendency to let risk go. And that's the entire concept of what prospect theory gets to, is that when traders look at the profit versus the loss, they're quick to lock in profit. They're quick to let risk run a little bit because they want to show a profit. Mm-hmm. No, you gotta get to the point where you let the data do the talk and let the analysis do the talk and make decisions based on momentum. And right now, Apple hasn't, and you want to let it run. Could Apple, form a doji tomorrow at 200? Yes, that's a different discussion, though. That you would have to make a different call on. Right now, I see momentum behind Apple, and you want to let that run.
Absolutely. Dow Jones Industrial, Cody, give me the YM contract if you would. Let's just give a quick look at the technicals. Doji day on the day, not a lot different than the S&P 500. We're up at resistance. We got economic data coming through the week. Not a lot to see here. Move on to the NASDAQ if you would. NASDAQ from a technical perspective is a little bit different than the S&P and the Dow in the fact that it's showing me more strength here, Matt. It's holding the breakout point, light range candle on the day. Apple's leadership there is holding it up. There's not a lot of Of the big names that are grabbing my attention, Amazon's holding the breakout. Intel, Cisco look good. Google, though, is actually potentially putting in a lower or a changing pivot relationship. Give me a look at Google here. And I know it ran, this is maybe a little bit different here. Red candle below the previous red candle here. Let's get Matt's analysis first. Matt, is that where, if you were long Google, is this enough for you to say, okay, I'm going to lock in profit now?
I never would have been long Google because I didn't call that a retracement. I'm looking at this as a potential neutral type, stagnant type pattern. You have a little bit of head and shoulders formation from a short-term perspective happening as well. And that's what I see when I see, flag-based patterns get broken from a support level and then you're sending a lower low. And that was my entire argument, was that I didn't feel this could get above that previous level of resistance. And we're seeing a little bit of weakness at that 1225 level. Should come down and retest the 1200 level.
Yeah, I agree with that. Mark, when you're looking at the overall technology area, we have it very highly rated, obviously, because of strength in tech. NASDAQ for me is number one. When you compare the NASDAQ against the Dow and the S&P, do you guys have it the same way I do, where I have the NASDAQ at the top?
I do.
By incremental margins, but I think the trend is pretty clear on it. So.
Yeah, risk on environment as we're heading into earnings season.
You do have a little bit of a high base type forming on the NASDAQ over the last 3-4 days, and you're not really seeing that on the S&P. You have a little bit of a price appreciation coming into that 2,900 on the S&P versus on the NASDAQ. You have a little bit of a high base type situation forming where you do have a fairly clear level of resistance right around the 2616 to 2620 level. Keep an eye on the NASDAQ at the top level at 2620. If you can break out of that 2620, and it could do it today, Tim, the market has responded after the cash open. If you'll remember, guys, that tick at the top is 77.28. If we can get above that level, we should get up to that 77.28 level, and you might start seeing headlines later this week, maybe into next week. Markets at all-time highs.
Mm-hmm. Let's move on to the RTY if we can. RTY is the Russell 2000 futures contract, and obviously a lot of traders out there trading the RUT.
Isn't it insane, though, not to diverge? Isn't it insane that I agree with what you say, despite the fact that many people are baking in a first year-over-year earnings recession since 2015? People are expecting this earnings season to be dismal, and yet the market just keeps skyrocketing. What the hell is going on?
Algos.
Well,
euphoria.
You tell me, Mark. I think
irrational exuberance.
Economic data is terrible. Last quarter's guidance was terrible. Everybody is baked in like negative earnings growth this year over year. And yet, it's just crazy.
Well, there was a JP Morgan analyst who came out with his price target at 3,000. And one of his arguments was the fact that the market cycle is completely broken given what the central bank has done. And we're never going to see another bear market. Now, that is not something I believe in.
You don't agree with that?
No, I think it's stupid.
Listen.
Well, then why wasn't his target 4,000?
I'm sure.
If we're never going to see another bear market, why wasn't it 6,000?
It was probably
I think his argument was 4,000, and the other JP Morgan analyst was like, no, 2850. But no, it's interesting to see what the central bank has done to really kind of break the market cycle. And even though I don't believe that the market cycle has been completely broken, if we do create a monetary environment for the next 10 years like we have for the previous 10 years, you are talking about a market cycle that is not based on U.S. economic policy, monetary policy, interest rates. You're talking about stagflation, and that's what we are risking by continually just begging for this market to continue to go up, is economic stagflation, and that is not good for anybody.
I mean, I read the same article you did. I thought it was fascinating. My takeaway was, if you're right, that doesn't mean we're not going to ever, like, the business cycle, if it's broken, that means we're entering something that's really nastier. That means that at the end of whatever this cycle is a disaster. If the business cycle has actually been broken and we're entering a new phase,
it's the worst thing possible.
The second the central banks can't fix the problem, what does that mean? it means total disaster.
By the way, this is both left and right economic theory at the current time. I will say that this is not about politics. And even though everybody throws the shade
Are you kidding me?
that the young guys do on Bernie, Matt, with modern monetary
Republicans right now are begging for quantitative easing, and that makes my Republican heart die.
Yeah, I get it. It's the right and the left. They don't believe in traditional economics anymore. It really, capitalism has changed. There's no question about it. And they're willing to print us to oblivion. And if you don't think,
even Ray Dalio was coming out yesterday talking about how
did you see
capitalism is a problem, and it's just like, are you?
Oh my God, it made me sick when
I literally was like,
what? And I like Ray Dalio.
I shut the TV off and I was like,
what is he doing?
I'm talking like an idiot right now. I stopped watching.
Hey, when you're a billionaire,
like, Ray Dalio,
your opinion.
Please tell me what version of capitalism you're talking about.
What he sounded like, and go check the 60 Minutes interview. It sounded like very base Karl Marx theory to me.
Yes,
he was talking about the haves and the have-nots, and how there would be a violent revolution on the next economic downturn. That sounds like Marx 101 to me.
That's on Capital.
That sounds like Karl Marx 101 to me. And there you have 60 Minutes promoting Karl Marx base theory
from a billionaire hedge fund.
Billionaire capitalist that made his money in a capitalistic market.
On a program 60 Minutes that was promoting capitalistic products.
And you know why Ray Dalio is dead wrong?
It's funny.
100% dead wrong. He is dead wrong because of video games and Netflix. Karl Marx did not see video games and Netflix coming when he wrote his manifesto. The poor will always be placated by modern technology. They can go watch Netflix for $10 a month. They're not going to do an uprising because they can buy a $1 burrito and play video games and watch Netflix.
He's not wrong.
They're like, so that's why Ray Dalio's wrong on his freaking Karl Marx bullshit theory that he espoused on 60 Minutes last night.
Let me just say one thing.
You're talking about the United States, though.
Okay. Hold on. Let me say one thing to what Marx said. Karl Marx's argument was that capitalism and the flaws within capitalism create an imbalance between the money supply between the rich and the poor, the haves and the have-nots. And because of that imbalance, and he was really looking at the French Revolution when he was writing his book, is that he said that there would be an uprising against capitalism to foster in economic utopia, which is socialism in his opinion. And when you're looking at America over the last 15, 20, 30 years, guys, you are seeing an imbalance between the money supply between the rich and the poor at certain levels that we have never seen in American history. There are flaws within capitalism, but my argument is we need to go back to the original version of capitalism and not crony capitalism, which is always based on the top of the market instead of really building up bottom-up economics. So I would like to talk to Ray Dalio and talk to him about what he believes capitalism truly is and what his answers to that version of capitalism is, because I completely disagree with everything he said last night.
The only thing I'll defend Ray Dalio is, you know how interviews sometimes can be cut to not give the full story. Yes. I felt like I wasn't getting Ray Dalio's full version of his philosophical beliefs on how it would play out. I feel like I was getting 60 Minutes version of a cut, interview. So,
well, all I know is Ray Dalio lost a lot of credibility within a lot of people last night.
I literally was so upset. I couldn't sleep last night. Well, that's not why I didn't sleep, but I was upset.
And again, I like Ray Dalio. I have a lot of
love his books
for Ray Dalio. I just completely disagree with what he was trying to do last night. What was he launching a presidential election bid last night?
What it felt to me, it was like some 18-year-old college kid who just took his first political science course and had been exposed to Karl Marx for the first time and been like, yeah, that's right. And it felt so naive and so limited that I was like, it sounded stupid. It sounded like it was a stupid person that has spent 30 minutes discussing philosophy. And that's why I'm giving Ray Dalio some credit here. I don't think it was his full philosophy, or I think there was something with the interview by the leftist media trying to portray what they wanted to portray.
Okay. So, the leftist media is the one who made him say that capitalism is wrong and that
no, but the leftist media is the one that cut out all of the explanatory dialogue.
Let me hear Ray Dalio come out and defend that today. I haven't heard Ray Dalio come out and be like, "Hey, listen, they took me, they cut my interview." Come on, let's not do the fake news today. He literally stated it. He was on 60 Minutes saying it, and I get it, Mark. I know what you're trying to do, but nonsense, absolutely nonsense. I'm calling bullshit on that one. That's ridiculous. He made the comment. He needs to own the comment. Let's not blame the left-wing radical news media.
Well, if that's true, then he sounded like an 18-year-old freshman at college.
That's much more accurate.
Karl Marx.
That's much more accurate.
From all that he said, what do you guys think about the dollar?
Yeah. Is that Cody trying to rein us in?
Why would you rein us in? We're fighting for the heart of capitalism here.
And then I'm going to use that as a caveat onto the U.S. dollar.
Say la vie, brother. I will say this though. I mean, I have not seen the full interview from the 60 Minutes interview, and I do believe that Ray Dalio is a very well-informed, very good capitalist. And if he has an opinion on something, I'm at least going to listen to it. Doesn't mean I have to agree with it. And I will critique it if I do believe he is wrong. But
so says the Bernie supporter in 2020.
Yeah. I mean, here's the thing, Mark, he's a billionaire. He's made billions of dollars through capitalism, and he has a critique on the system. You wouldn't want to thoroughly think through what his opinion is?
Okay, but philosophically, when a person's that rich, can you trust them to be speaking from the mind? Or
I'm so sick of this. I'm so sick of the anti-capitalism BS that I hear in society.
It is all over these days.
Society. It just shows a complete, utter ignorance of all economic philosophy and economic history. People don't even read books. They get 3-minute videos on YouTube and they make their opinion based on that. Capitalism is not the problem. Capitalism is the answer. We have to go back to who we are at our core. That is the answer. And we have to understand what a capitalist is. A capitalist is not take all the money from everybody else. That's not what a capitalist is. A capitalist believes in small business creation. A capitalist believes in regulations. A capitalist believes that we believe in the free market. That's what we want to get back to, is the free market. We don't like the central bank coming in and manipulating price and killing market cycles. We don't like hyperinflation. We don't like massive devaluation. We like stable prices, maximized employment. We like small business environment, and we like a competitive environment where it is good for consumers. It is bottom-up economics. Read The Wealth of Nations, for God's sake, people.
Yeah, well said. I love it. Dollar here hitting resistance might be the market storyline of the day. I will say that, because when the currency markets move, Matt, obviously that's going to impact commodities and everything else. You have a European Central Bank event this week where they're going to announce monetary policy for them. And we know what their monetary policy is, like you said in the pre-production show. The dollar hitting its head here. Read it technically for me, Matty.
Same thing that we've been going on in the last week, Tim. You know, it's you have overhead resistance. You haven't had no economic activity to really to propel it above that resistance level at 97.70, and you're coming back down, testing an intraday support level at 97. I don't think there's anything to see here until we see the ECB on Wednesday morning.
Yeah, I would agree with that. FOMC minutes are also due out on Wednesday as well. CPI and some PPI inflation data later in the week. You're going to get more economic data coming through. You know, there's no question, but we know the economics. Europe's in a mess. China's improving. The
I'll
US
just tell you. I'm going to tell you exactly what he's going to say on Wednesday, Tim.
Yeah.
Okay. He's going to say that the European Union is struggling from an economic perspective. We're seeing negative data coming out of Italy, coming out of Germany. We're a stone throw away from a recession. We're not going to be raising rates in later part of 2019 or 2020. We're going to maintain our monetary policy at 0% interest rates, and we're going to maintain our balance sheet. It's going to be a dovish reading on the European Union. The only question we have is how dovish is it going to be, and that's where the price is going to really kind of impact on Wednesday.
And I agree. I think what you just said is just like, that's going to happen. The one thing I want to know, and it's the only thing I care about, is what are their forecast models? Because last meeting, they took a bat and said, you know, we were going to be at 1.7% growth, and now we're down to 1.1. So they took a bat to him last time. Are they going to take a bat to him again? Because if they take a bat to him again, and this market still goes up, the U.S. economy cannot climb if Europe goes into recession. It just can't. And so if they slash their forecast from 1.1 to something like a 0.3, a 0.4, basically on the brink of recession, and the market ignores this, then that's just lunacy. So that's what I'm looking forward to.
I think they're going to be in the mid between 0.4 and 0.6 is what I would kind of put them at.
Which would be a cut from their last thing, which would show that, Europe is really, and that's what all the data shows. It's
I was just going to ask you that exact same thing. From the last time we had the ECB 6 weeks ago to today, it's not like we've seen any.
The data has been terrible.
I mean, every European data point has been a negative. Even today, Germany had a decrease month over month with imports and exports, guys. Not just exports, imports and exports, just this month alone. Germany is one of the most important countries in the European Union. I don't see how they can come off their dovish stance on monetary policy.
I hope the dollar pulls back heading into the ECB.
I do too.
I never do, but I might be tempted to blindly buy the dollar against the euro heading into the meeting.
Because that might be a little too aggressive on that one.
But
Coach Mark does that. Students do not.
Yeah, no, nobody follow that one. Nobody follow that one. But
then when I brag how much money I made on Thursday, people be like, cash money.
I saw a guy one time brag on Facebook because he bought put options before a Facebook earnings report, and I just kept thinking that really shows how ignorant people are sometimes.
Yeah.
So Mark, don't be bragging.
But if your analysis is based on the trend of all of the last 6 ECB meetings, and you show that, then there's a little bit different than some idiot.
I get what you're saying. I get what you're saying, and I agree with the overall sentiment. Obviously, I mean, I made a statement yesterday, guys, that I don't think the euro is going to be around in 20 years, and I'm not sure I can be convinced otherwise. I think there is tremendous weakness in the euro, and a lot of it is because, and guys, as a U.S. consumer. Okay, I want you to look at what Europe's going through right now. Europe's going through the beginnings of economic stagnation the same way Japan did in the late 80s and 90s. And if we continue to foster a monetary environment that we are doing and that our president supports and that Jay Powell supports now, we're looking at that exact same thing in America.
Yeah. Yeah, obviously, currency markets are the top of the analysis whenever you're starting with top-down analysis. Events like that, when you have central bank meetings from the European Central Bank or the Bank of Japan or any of them, you have to pay attention. You can check the calendar. You have to. You can check the calendar. We use a lot of different calendars, but the best one to go to is just go check the newsletter from the weekend. Cody, another great job on the newsletter this weekend, young man. I really enjoyed that. Fantastic analysis.
Thank you.
Let's move on to
on this week's. I feel like I did the same thing, but
how old does Cody have to get before you stop addressing him as young man, Tim?
85.
60. At least 60.
I say that to
I think young man is getting stuck till his 40s at least.
I might start calling you young man, Mark.
Yeah, see, when you get as old as me, then you start liking hearing it.
Right. All right, say la vie. We're just going to use all the catchphrases here today. Move on to crude oil, if you would. There was some news at, what was it, Libya? I saw something happening. There was violence coming up. Obviously, you've
airport
got
bombing in Libya.
Airport. Yeah, and then you've got an OPEC meeting later in the week.
Thursday.
With the dollar down and all of that stuff going on with oil. Oil is obviously up here today. It's now above moving averages. We're approaching that $65 level, which psychologically I think would play in, but it's just in a clear uptrend here, Matt. Matt, what's your read on oil technically?
It's kind of breaking out of that pattern that we've talked about, that 2.5 range. Last week it hit that 2.5 up into that 62.5 mark, kind of consolidated there for about 2 or 3 days, broke out pretty strong on Friday, and then it obviously is continuing with the negative news coming out of Libya. OPEC on Thursday is going to be a big deal, and it does seem like OPEC, and I want to get Mark's take on what OPEC's going to be doing later on Thursday, but OPEC does have a desire to drive prices up, and they're in that money-making mode right now. I would look at 65 as a potential target, and I do think it's more than a psychological target here, Tim. If you look at back in last September, last August, last summer as well, when you're looking at June and July, you had a lot of support there between $64 and $65, and so that is obviously a price target here at 65. look for the momentum coming into 65. Obviously, the bulls are celebrating, and this trend has been doing very, very good over the course of the last couple months. But 65 is absolutely going to play a role acting as a resistance level.
You know, dollar down, commodities up, and gold is going to be the next one we look at here, Cody. Gold is showing some strength. The candle is giving back some of that pressure, and you still have kind of a range here. I'm now neutral on gold in the short term, obviously bullish on the long term, just from a fundamental perspective. Mark, when you see a candle like that and gold starting to move higher, what would have to happen for it to give you a short-term signal that it is a buyable product?
I gave up 4 weeks ago trying to determine short-term signals on gold. The analysis I gave in the commodities report this week is that it is currently, I think you can call it officially range bound. It's been trading in a sideways fashion now for over a month. You have a couple of fairly reasonable short-term support levels you can identify. You have one resistance level you can identify. Officially call it range bound. We've had range bound rankings on gold for the last couple weeks on our weekly newsletter that Cody writes. So when things get range bound, the charts are just sloppy. They're just really, really, really sloppy. And so it's a tough chart to trade from like how you trade Home Depot. It's really tough to apply some of those same techniques to gold in its current pattern.
Stay with gold here, Cody. Go back to gold. I want to get Matt's take on something. Matt, you've already made this point and comment many, many times, but I want you to reiterate it again. Day swing position or investment, gold has a certain style, right? Mm-hmm. And it has a certain personality. What does it fit the best personality of trader?
For me, longer term position to invest. I mean, that's kind of what I always treat gold as. I don't ever want to overreact to a daily chart on gold. From the current short-term trend, you are absolutely dealing with range band and neutrality. Guys, I honestly believe gold's fighting right now for its short-term support levels because if you get under that neckline right around 1288, and if ultimately you break that 1280 mark, Tim, you're not talking range bound, you're talking bearish at that point. And if you break 1280, you're talking 1260, 1240, 1220. You're walking the stairs down at that point. So gold's fighting, and you got to give it a lot of credit for fighting on this neckline right here in the head and shoulders formation. I'm not looking to buy here. I'm not looking to add here. I'm not looking to do anything on gold. And this really does remind me of the range bound we were dealing with last year. Earlier on last year when it was 1300 to 1360, it was range around between 60 points.
Isn't it impressive though how well it's doing considering how strong the dollar is? Like, well, it's holding its own.
I mean, yes and no. I mean, the dollar has shown strength over the course of the last year, but if you look at the dollar chart, the dollar's been neutral for the last 4 months. I mean, between really 96 and 97.70. So, I mean, gold being neutral right now, the dollar being neutral right now. The impressive run was in November and December when the dollar was showing a little bit of strength and gold was showing a little bit of strength here. So it is impressive, and you got to love that it's fighting defensively on that neckline and on those horizontal support levels. But I don't see a tradable signal here, and I don't see a tradable signal here for.
And it's probably I just hope it doesn't break support when I make all the money I'm going to make on the dollar pre-Wednesday Euro meeting.
Well, so. I will tell you, if you're right on your dollar, you're going to be wrong on your gold.
Well, I need to hedge it. I got to hedge my long-term gold investments with my short-term dollar trade.
Ray Dalio's rant on capitalism has prompted Mark to want to push his chips into the middle. I can tell he wants to make all the money right now. If nobody else wants to be a capitalist, Mark,
I got to before they take away my ability to, actually make any money. Before I just become a surf in the system.
That's right.
Just make the money this week.
Other metals of note here today, I will say copper about approaching a breakout. I still like the neutral pattern if it breaks. That's my opinion on copper, but platinum just extending its run. Platinum's been a juggernaut, Matt, since you called that breakout last week, and it's just taken off. Another day up here today. Looking good. Looking good. Let's move on, though, and let's talk about crypto for 1 second here real quick. And give me Bitcoin if you would, Cody. Since the breakout, guys, it's been holding. And actually, I expected, I don't know what I expected, quite frankly. Crypto and Bitcoin has been crazy now for a long time. Matt, from a technical perspective, if we can break above 6K, and I know that's still 800 points away, but that was the major long-term support that when it failed, the whole bottom collapsed. Do you have any interest in the crypto markets as they're starting to show strength?
Not yet.
Not yet.
No.
We'll keep looking at them. We'll keep looking at them because they are obviously markets that we're going to pay attention to. I'm still not there from a short-term perspective either, though, Matt. I'm not adding any positions.
I will tell you, my interest has peaked.
Yeah.
I will tell you that from the breakout that we called last week, my interest is absolutely peaked. I do want to see it show a little bit of strength above its 200-day moving average. I mean, it hit its head on there earlier last week, could not break out of that 200-day moving average, even after big candles, a lot of momentum coming into that 200-day moving average. I got intraday resistance right around 5,400. If you can get above 5,400, show me a little bit of price appreciation, show me a confirmation on the 200-day moving average. Oh yeah, I'll be ready to rock and roll.
Cody, we're going to rapid fire through the XLs here, and I'm going to get Matt's take on them as we go. We've also got yard markers. You can go to the newsletter, or we can keep them right here in Thinkorswim. Either one's fine with me. I don't really mind. The newsletter scoreboard, and I'm going to read the rankings as we go here, Matt, to make sure we see this. One of the strongest ones that we've had on this has been, and we've moved up the energy in the materials sector. There's no question about it. Matt, read materials for me, if you would.
Base materials has been extremely strong since it broke out of the $56 handle over earlier last week. It is forming a higher high at this point right there at 58. We talked about this last week on the halftime report as well. That's going to act as a resistance level as it's been a support level in the past. You are range up on the materials sector. Expect a little profit taking here on the materials sector, as we should all do if we've been making money in that environment. I expect a little bit of a high base here at 58. Or the better trade here and the better technical setup would actually be a retracement to come back down and test out that breakout channel. But as of right now, in the short term, you've made your run in the materials sector. Things are overextended. You got to wait for a proper setup, either through a high base, flag, or some type of retracement on materials.
Communications next here, Cody. Obviously, the communication sector has been in focus. So many companies in the sector that everybody's paying attention to. Matt, XLC also range up on a little doji. Anything to add on that one?
Very similar type of analysis that you're seeing on communications. I don't necessarily believe it is range up like materials is. Materials is past its typical potential average yield, although communications is getting close there. Over the last 3 to 4 days, you are starting to form a high base here on the communication sector. You have a very, very, very clear intraday resistance level. If you'll break that down into a 30-minute chart very quickly, right there at about 48.36, 48.37. So you have a very, very clear resistance level that if you do break out of that resistance level on the intraday perspective, you should see good price appreciation coming out of that.
Yeah. Let's move on to XLE if we can next. Obviously, materials and energy are very often going to trend in very similar fashions. Materials going to have more chemical companies, those types. This is more the oil companies, Matt. XLE now approaching the 200-day moving average. To me, there's differences in this chart here. What you read?
Oh, there's massive differences in this chart. Whereas basic materials and communications had broken out and set a higher high. When you're looking at the energy sector right now, you're talking about a sector that literally just confirmed the breakout on Friday. And now you're showing a little bit of a light range candle, showing a little bit of slowing momentum coming into that 200-day moving average. But this thing just broke out. There should be some good bullish opportunities in this sector coming into this week. And from an intraday perspective, you're really hugging that 20-day moving average from an intraday perspective on the 30-minute chart. Keep an eye on that as well. I do think it is very important, if we're going to be bullish in the energy sector this week, that today we stay above the 67.5 handle. That to me is going to be your signal that we're still bullish. We're still slightly bullish on the sector, but keep an eye on 67.5.
Financials are the only sector we had a negative rating on from an XL perspective. And just, you've got a triple top developing here. They've failed to break out. We also have weakness in certain areas of financials, Matt, specifically companies like Wells Fargo, which have been downgraded, has earnings this week.
Banks and brokers.
It's not an aggressive bear call, negative 40-yard line, but what you read here?
It's obviously the sector that is not performing like the other sectors out there, and it's an extremely easy call to have this left of the 50-yard line and the worst performing sector and the expectation for the worst performing sector coming into this week. From an intraday perspective, from a resistance level perspective, keep an eye on 2665. Keep an eye on 2670 into that range. If you do break out of that, you should see price appreciation coming into that triple top right around 27. I'm not looking to buy anything here in the financial space coming into this week. I'm looking for a little bit of confirmation on the downside. And when I'm looking at that potential confirmation on the downside, me personally, I'm looking at 2620 on the intraday. If we can get back under 2620 on the intraday, you should have some confirmation for shorts in the financial sector.
Yeah, XLI is next. And obviously, Boeing comes to mind when you think of industrials, but also the companies like GE, and those are in the industrial sector as well. You see it hitting a double top, Matt. To me, it's got opportunity if you do break out, but you also have kind of a neutral range developing here. What you read?
I honestly see the beginnings of a cup and handle here. Is what, and it might be a textbook master trader type cup and handle here. When you hit that when you hit that resistance at 77.50 back in early March, you double bottom there at about 73, 72.50 coming into mid-March and later on in March. And now you're kind of double topping that 77.5 level is again, look for this to come back down into that 75 handle. And then you're starting to talk about a cup and handle, and a breakout after a cup and handle is actually really, really, really powerful. But I'm going to be a little patient here. Patience is a position.
Yeah, I agree with that as well. Many companies in here that we focus on, we love, but you got to be patient, wait for a trigger. Technology is our highest rated aggressive sector. It's been bullish. It's been a juggernaut. We know the likes and the strength of companies that have been leading this sector like Intel and Cisco and those types. Matt, we're approaching an all-time high. It feels like it wants it. What's your take?
My take's 76.27 is my take. And that is the only number you need to care about from a technological perspective. That was the ding on Tuesday at the top. And if you'll remember, the ding at the very, very top at the all-time trigger on technology was back in October of last year at 76.27. It's almost like technical analysis works. Keep an eye on that 76.26, 76.27 level. If you can break up above that level, guys, you should have some euphoria coming into it.
Staples next, and then real estate, utilities, discretionary, and healthcare were coming down.
There is zero chance I don't buy 100 shares if it breaks that pivot point. And I'm a pretty
conservative all-time high
breakout entry.
Yeah,
it's breaking out of an all-time high.
And that pivot, how it stopped there on a dime.
It was 1 cent. And guys, that's not people. I want to be.
That's not people. That's computers. So if it goes above that,
what are the computers going to do?
What are the computers doing? And I want to be on board that train.
They're going to buy. And there's an old mindset talked about in one of my favorite books ever, Reminiscences of a Stock Operator: buy high, sell higher. Breakout mechanics, turtle traders did it. Richard Dennis talked about it, Matt. It's a hard thing psychologically when you're a new trader.
Get over it.
To pull back. But
you
got to play
it. Breakouts are the most powerful pattern in the market.
In fact, in the chat here right now, guys, if you're on the halftime report in your team tackle, just type in buy high, sell higher. Breakout mechanics are very, very important. Staples had a beautiful pullback pivot, Matt. It's on its way up. Bullish call on this one. Pretty easy, right?
Yeah, extremely easy. I mean, you came back into the breakout channel like we talked about. You dinged to literally at $55, which was the old level of resistance. You held that level confirmed on Thursday of last week, and you should have some good opportunities in this sector this week.
Yeah, keeping moving through some of these areas. XLRE, real estate, which really isn't property, by the way.
It's REITs.
It's REITs. It's dividend paying REITs that you're not investing in like land development, stuff like that. You're investing in REITs if you do the XLRE. Well, XLRE has been bullish as competition for the bond market here, Matt. The dividends are higher than the 10-year yield.
REITs are this sector in this space, and REITs in general are some of the most bullish that have been around for the last 15 years.
Yeah.
And you're seeing just a fade action right now. It's got a real weird pattern over the course of the last 2 weeks, to be perfectly honest with you, where you don't have any true price action. It is just a fading on the way up, and you have a trend line going up. You got a trend line on the resistance, on the support level. I don't see any type of opportunity from a swing trading perspective here, but you don't swing trade REITs.
No, you don't. But I will tell everybody out there, if you're looking for capital allocation and you're sitting on some cash, I mean,
if you're looking for safety,
yeah, safety is in the dividend payers right now, including utilities. Cody, give me utilities next. There's a lot of companies out there. They're not swing trading vehicles, but they do pay a nice dividend. XLU is also on a pullback, Matt, which could allow for some capital appreciation if the stocks start going back up. A little bit of a momentum change in that pivot, though. What's your read?
Slowing momentum. Now you're not in a bullish uptrend. My read. You're really looking at a neutral trend in the short term. You're looking at potential reversal patterns, but really what you're looking at is neutrality. But I still like utilities from a safety play. I still like REITs from a safety play. And if you're looking for some safety in a market where you might be a little cautious, the XLRE, the XLU, they pay good dividends, and they're going to be safety plays when markets go down.
Yeah, healthcare is next, then discretionaries will be last. Two more sectors. Mark, the complexity of XLV is really in the fact that there's so many differences in the industries. Healthcare plans and biotech are very different, and drug manufacturers are very different, and the news that impacts those companies is also very different. We're right on the 50. That's a neutral range. Matt, that's a triangle pattern as well.
It's a symmetrical triangle.
Yeah. When you see this kind of compression, do you just say, hey, neutral, I'm going to go stock pick?
I stay away. I stay away. Some traders love trading symmetrical triangles, because a lot of what happens a lot of times is you have upward movements in support, you have downward movements in resistance. It's creating a lot of pressure on the stock to break out one way or the other, and you basically have your order above your trend line is what you have. And I've always really struggled with it, to be perfectly honest with you. And it's the same reason why I struggle with flag patterns. When you break out of that 30-minute resistance level on the flag pattern, that is a great trading signal. But then my analytical mind, I just always go to those horizontal resistance levels. And I'm like, well, what about that horizontal resistance? And what about that horizontal resistance? And what about that horizontal resistance? So I have a tendency to really miss out on flags, and I have a tendency to really miss out on the symmetrical triangles. It doesn't mean they're not great patterns. They are absolutely great patterns. But I just struggle with that because I look at that breakout of the trend line, and I still have overhead resistance levels that I have to be concerned about. And so for me, I'm going to wait for this. Not for the pattern to break. I'm going to wait for a trend to develop here on XLV before I do anything even remotely aggressive.
Yeah, and XLY is going to be last here. Discretionary sector. It's been a juggernaut. You got the all-time high up here at 118. What is that, 13? And we're sitting at 117.80. Feels like it wants to at least hit it and touch it and test it.
Yeah, it does. But you do have a little bit of difference on this one versus the technology. On the technology one, Tim, you're forming a high base coming into that. You've taken a little bit of a break when you're going into that breakout. And everybody in the community knows me. I don't like breakouts when you've already ran into the breakout. And XLY has been a juggernaut. It's been absolutely on a freight train. It's been doing absolutely great. And you're running into that breakout channel on that all-time high on something that you probably could make a fairly significant argument that it's already overextended going into the breakout versus the technology, where you're kind of, you're forming a little bit of a high base on that breakout. Both of them are going to be legit. I prefer the technology over the consumer discretionary one.
And we are long here today, but last but not least, I got 4 quick updates from our stocks that we've talked about recently. Cody, just rapid fire through them. Don't need long analysis. AMC is up on anticipation of that new Avengers movie coming out. The opiate of the masses, Mark, not only video games, it's also Avengers movies, apparently. And the pre-ticket sales are incredible, I guess. They're just rocketing, and it's going to be a big showing, no doubt about it. Roku, which we've looked at many times, actually just broke down, guys. If you don't have Roku on your watch list, I got to tell you, M pattern double top, breaking below support on some news here today. It may not be tradable today. You've got to do your own analysis and your own rules. But that stock is a high momentum company that's now showing weakness. Snapchat is extending its run. SNAP, real quick, Cody. And we've had this one, on watch list, and we've talked about it plenty of times. Earnings are coming up, but they're actually showing a lot of really good things on the back end of what they're doing from a profitability standpoint. And Matt, maybe one of my new favorites, which I haven't traded yet, but I've got it on my list.
Terrible company. Go
No,
long.
not Snapchat. Stone.
Terrible company.
Stone. STNE. High momentum. Pullback pivot. You got some moving averages. It's got to break probably back above 40. That's a huge momentum play. Obviously, it's an aggressive company, aggressive stock. And Matt, we're going to end on one thought here, and that's Lyft.
Oh, that's funny.
Jim Cramer. By the way, if you're not on Twitter, get on Twitter.
Kramer, why'd you delete your retweet?
Jim Cramer retweeted Matt, and Matt and Jim Cramer were engaging each other on Twitter.
We were having a civil discourse.
And then, because Matt was criticizing Cramer's take on Lyft.
No,
then,
that's not what I was criticizing. Him celebrating on Thursday a one-day movement in Lyft. That's what I was criticizing. And I said to Jim Cramer, I said, it's highly entertaining to watch you pump up this stock and then celebrate a one-day winner. I think you're celebrating a little too early is what I said. He retweeted me by saying that I'm just celebrating the process. And I should have retweeted him today and said, well, I did tweet about Lyft today. I said, well, congratulations, Lyft. Here's your first bearish retracement.
It is a bearish retracement. Green candle 4 days in a row.
That's actually a really good tweet.
I mean, that's incredible. I told Matt that every time he gets in a Lyft, he should take a selfie and then.
Because it is. Look at the bearish retracement play out. You know.
I don't see Kramer celebrating Lyft today.
Awesome. Hey guys, always appreciate your time and joining us here for the halftime report. If you're here and you're watching and you got value out of today, give us a like, give us a share, get the word out there. Hashtag Team Tackle is our official hashtag. We always do that. Great to have you guys here. Mark, what do we got on deck here for this week at Tackle Trading? I think we've got Mastermind Group on Wednesday, things like that. Give us a rundown.
Okay, well, every day we have coaches lounges at 11 a.m. Eastern. This specific week on our night shows, we have the coaches show tomorrow night where myself and Tyler Craig, author of the Bear Market Survival Guide, Cash Flow Condors, will be hosting the show, talking about a wide variety of subjects. Wednesday, Bear Market Survival Guide. Bear Market Survival Guide. Thursday, Cash Flow Club, and then our weekend reports.
Sounds great. Matt, we are out. Great job today. We're going to be cutting a podcast today.
Yeah, let's make sure we pump up that podcast today. Got an amazing guest, speaker galore, real estate investor. Absolutely love this young man. He is one of the most motivational individuals I have ever met in my life. Brandon Diaz, special guest on the podcast, and I'm very excited to bring Brandon on. So definitely check out that. We will have that podcast out later on. I'd say later on tonight for all of you that want the commute podcast in the morning on Tuesday.
And Cody, drop the link to tradingjustice.com in there in the chat as well. If you love podcasts, come and listen to ours. If you're a loyal member, obviously.
Didn't we all also put the newsletter out? Did that go out?
Coming out. I think it's out today. If it's not published yet, I know it's coming out today.
And if you're a Game of Thrones fan, this podcast will be a very special one.
We're predicting who dies.
In Game of Thrones, which starts this Sunday, final season.
Yeah, like they don't have enough publicity. We need to do it on the halftime report.
It's the best show ever. I celebrate greatness, unlike CBS 60 Minutes, who obviously do not want to celebrate the greatness of capitalism, try to tweak it. I celebrate greatness in life.
I'll save the rant for the podcast. I'll save the rant for the podcast, Mark. But there was a New York Times article ranking the 20 greatest dramas of all time, and Game of Thrones was left off the list.
I read that, and that was a mistake. That was dumb. I read that article, Jim.
Yeah.
Game of Thrones is the best show ever.
I think it might be.
Drama, comedy.
There are different things I love about different shows. We can debate it on the
better than The Office.
The Office was tremendous.
Yeah.
British or American?
Shut up.
USA.
We're America.
Oh, all right, guys. We are out. Thank you for being here. We'll see you over at tackletrading.com.